You know that feeling, right? Trying to keep up with business news, maybe listening to an earnings call and just getting buried in numbers and corporate jargon. It can be pretty overwhelming. So today, we're going to cut through that. We're doing a deep dive into the latest results from AB InBev, the big global beer company. We'll look at their second quarter 2025 earnings call and press release, our mission to pull out the key insights, the trends, maybe some surprises, and figure out what it all means for you, the curious learner. It's like getting a shortcut, really, to understanding the global beer scene right now.
Exactly. And we're basing this on what the CEO, Michelle DeCaris, and the CFO, Fernando Tenenbaum, actually said on their call, plus, the official press release, the financial tables, the whole package,
We've waded through it so you don't have to.
pretty much.
And the first thing that kind of jumps out, setting up a really interesting picture, is this contrast. Strong financial growth, solid profits, expanding margins. But at the same time, a slight dip in overall volume, which sounds a bit strange, doesn't it? How do they manage that? Make more money while selling, well, less beer overall? Okay, let's unpack this.
Yeah, it does seem counterintuitive at first glance, but it really points to a very deliberate strategy they're executing. If you look at the core financials, profitability is definitely heading north.
Yeah.
Their normalized EBITDA, basically, operating profit before certain items had a solid 6.5% increase in Q2. It's about $5.3 billion.
Wow.
And for the first half of the year, it was up 7.2%, hitting over $10 billion.
Okay.
And maybe even more telling is the margin expansion. They added 116 basis points in Q2. That pushed their margin up to 35.3%.
Just remind us a basis point is 1/100 of a percent.
Exactly. So 116 basis points is 1.16% improvement in profit for every dollar revenue they bring in. Pretty significant.
Yeah, that is significant. And it wasn't just EBITDA, right? Their underlying earnings per share, the EPS, that looked pretty healthy too.
Very healthy. Up 8.7% in Q2 to 98 cents.
What really caught my eye, though, were the constant currency figures. Up over 17% in Q2, almost 19% for the first half. That screams real operational improvement, not just luck with exchange rates.
Absolutely. That filters out the currency noise and shows the underlying business strength. And you saw it too in revenue per hectoliter. That's how much they make per 100 liters, up almost 5% in Q2. Right. They're getting more value from each sale.
And free cash flow is looking better too.
Yeah, another positive signal. Up $500 million in the first half compared to last year, reaching $1.4 billion. So yeah, the financial engine is running well.
Okay, so the financial health is clear. But back to that volume question. They sold 1.9% less volume in Q2, 2% less in the first half. How do they square that circle?
Right, so they were upfront about it. They said it was, and I quote, impacted by soft industries and performance in China and Brazil. Those are two huge markets for them, obviously.
Obviously.
But here's the crucial bit of nuance. Outside of China and Brazil, which represents the other 2/3 of their business volumes, actually grew by 0.7%.
Ah, okay. So diversification helps cushion the blow.
Massively.
Yeah.
It shows the benefit of that global footprint. And the reason they could still deliver strong financial growth despite those volume headwinds, it comes down to what they call strategic revenue management choices, essentially. Pricing power, plus a big focus on premiumization, selling more expensive brands, and just running the business more efficiently.
Yeah.
Productivity initiatives.
So better prices, better mix of products, and tighter cost control.
Exactly. As the CFO put it, the fundamental drivers of our industry-leading margins, they remain intact. They're confident those core strengths are still there.
That makes sense. It's less about just pushing volume, more about, well, profitable volume, which leads us nicely into their strategy, their roadmap.
Yeah.
They talk about three main pillars. The first one is lead and grow the category, and they're certainly investing there. What was it, $3.6 billion in sales and marketing just in the first half of this year?
Yeah, 4% increase from last year. That's serious money.
What does that level of spending tell you? Especially when maybe some might be tempted to cut back in uncertain times.
Well, it tells you they're playing the long game. That kind of investment isn't just about short-term sales bumps. It's about building brand equity, shaping how people think about their beers, building loyalty. And you can see the results. Kantar BrandZ, which ranks brand value, found that AB InBev now owns 8 of the world's top 10 most valuable beer brands.
8 out of 10. Wow.
Yeah. Corona is number 1 globally, Budweiser number 2. Michelob Ultra has climbed up to number 5. Stella Artois is number 9. That's real brand power. And it underpins their ability to command premium prices.
And that premiumization idea, along with what they call balanced choices, seems central. Corona, for example, outside its home market of Mexico, revenue grew nearly 8% in Q2. Volumes up double digits in over 30 markets.
Right? And it's not just about the traditional premium lagers. Look at the non-alcohol segment. That's exploding for them,
Yeah, I saw that. Revenue up 33% in Q2.
33%. And Corona Cero, their main non-alc brand, nearly doubled its volume. It's apparently the leading non-alc beer in 7 of the 13 markets it's in.
What's really interesting there is who's drinking it. They said 65% of the non-alc volume came from new consumers and new occasions.
Exactly. That's key. They see it as a way to actually grow the whole category, bring new people in, find new moments for consumption. It's incremental growth, not just cannibalizing their existing sales.
And innovation plays a big part in finding those new occasions and consumers, doesn't it? They gave some U.S. examples.
Yeah, they did. Like Busch Light Apple, a seasonal flavor they brought back.
Yeah.
Apparently, it's the #1 innovation in the U.S. beer industry right now.
Get out. Busch Light Apple.
Yep. And they said its purchase rate among 21 to 24-year-olds is 6 times higher than the average for new products. So it's hitting its specific spot. And then there's Michelob Ultra Zero, only 29 calories. That's the #2 innovation, and already the 6th biggest share gainer in the whole U.S. beer category this year.
So these aren't just random new flavors. They're really targeted, low-cal, specific demographics.
Precisely. They're tapping into specific trends, health consciousness, unique flavors. It shows the definition of beer is broadening, and they're moving fast to capture those niches.
Okay, so pillar 1 is about the brands, the category growth, premiumization, innovation. Pillar 2 is about digitizing the business. This sounds huge.
It is. Their BE's platform, it's basically a B2B digital platform connecting them with retailers, bars, etc., now covers over 6 million customers in 28 markets.
6 million?
Yeah. And get this, 71% of their total global revenue is now captured through digital channels.
71%. That's transformative.
It really is.
Yeah.
It changes how they interact with their customers entirely. And the B's marketplace part, where they also sell third-party products on the platform, that's accelerating. The value of those third-party goods sold jumped 63% in Q2 to nearly $800 million.
So they're becoming a platform provider too, not just selling their own stuff.
Exactly. The total value moving through Beasties, their own products included, was over $12 billion in the quarter. And then you have their direct-to-consumer stuff. Zed Delivery in Brazil, Tada Delivery elsewhere, Perfect Draft for home kegs.
Right.
That brought in $134 million in Q2, up 6% from over 18 million orders. It's about owning that whole chain, from brewery to consumer, and using the data that comes with it.
Incredible reach and data potential there. Okay, and the third pillar, optimize our business. This brings us back to those margins and financial efficiency we started with.
Yep. It's about running the business well. They mentioned EBITDA margins improved in 4 out of their 5 big operating regions. That comes from disciplined spending, managing overheads, just being smarter about resources.
Running a tighter ship.
Essentially.
Yeah.
And a big part of optimizing is also managing their debt. They've been on this deleveraging journey for a while.
How's that going?
Steady progress. Their net debt compared to their EBITDA is down to 3.27 times. It was 3.42 times a year ago. Their long-term target is to get that ratio down to around 2 times, which would mean a really strong balance sheet.
And they're managing the debt itself smartly.
Seems so. They did some bond redemptions and issued new ones to push out maturities, make the repayment schedule smoother. And crucially, 98% of their bonds are now at fixed interest rates.
Ah, so that protects them if interest rates go up.
Exactly. It gives them predictability on their interest costs, which is valuable in today's climate. And, they also touched on sustainability progress, lower emissions, better water efficiency. That's part of optimizing too.
Okay, so that's the big picture. Financials, strategy pillars. Let's quickly touch on the regions, because as you said, the story isn't the same everywhere. North America, especially the U.S., sounds like a real bright spot.
Yeah, they called it an incredible turnaround story. After some tough years, their U.S. portfolio is gaining momentum, gaining market share. Michelob Ultra and Busch Light are leading the charge, the top 2 share gainers in the whole industry.
Michelob Ultra growing in all 50 states, you said.
All 50. And Busch Light is breaking out of its traditional heartlands. Plus, they're ready-to-drink spirits like Cutwater and Neutral saw low teens volume growth.
So what's the lesson from the U.S. success?
I think it shows that sticking to a long-term strategy, rebalancing the brand portfolio towards what consumers want now, and consistent investment, it really can pay off, even in a super competitive, mature market.
Right. And Europe, another mature market, but sounded like it held up okay.
It did. Resilience was the word they used. Volumes were flat overall, but importantly, beer gained share from other alcohol types. And AB InBev's brands did better than the industry average in 5 out of their 6 key European markets.
So even flat volumes can be a win if the market's shrinking or you're gaining share.
Precisely. And they highlighted some cool activations pairing Lef with food in France, Stella Artois at Wimbledon, the Corona 100-year celebrations. It shows you can still find growth pockets through smart marketing and focusing on occasions, even when overall consumption isn't booming.
Okay, now for the flip side. China and Brazil. Clearly the challenging spots this quarter. China volume down over 7%, Brazil down 9% for beer. What went wrong there?
Yeah, distinct issues in each. In China, the main problem seems to be ongoing weakness in certain regions, especially in bars and restaurants, the on-trade channel, as they call it. It's been stubbornly weak. Most of the growth, what little there is happening in supermarkets and stores, the off-premise.
So people may be drinking more at home, less out?
Seems like a factor, yes. And for Brazil, it was a mix. They said the whole industry was soft, partly due to adverse weather conditions, rain impacting outdoor occasions, maybe. And they also pointed to their own strategic revenue management choices, which means they put prices up, likely impacting volume short term.
So how are they responding to these bumps in China and Brazil?
Adapting the strategy. In China, doubling down on execution in the in-home channel where the growth is, and pushing innovations like Harbin Zero Sugar. In Brazil, it sounds like they're sticking with the price strategy for now, positioning themselves for the second half of the year, perhaps expecting the market to adjust.
Okay, looking ahead then. Despite those challenges, the CEO sounded pretty confident about hitting their full-year guidance, that 4 to 8% EBITDA growth target.
Yeah, based on the strong first half and the strategic choices they're making, they seem confident they're on track, and they've got some big marketing pushes coming up.
Right, the NBA, the NFL partnerships, more Corona 100 stuff leading up to the Winter Olympics.
And then the really big one on the horizon is the FIFA 2026 World Cup.
Ah, yes, hosted across North America.
Exactly. The U.S., Canada, Mexico,
That's right.
in their strongest geographical footprint. It's going to be a bigger tournament than ever before, and these events usually provide a significant bump in volume for the whole beer category in host regions. So that's a major opportunity they'll be planning for.
A potential volume tailwind down the road.
Potentially, yes. Their overall view is that long-term, the global beer industry will keep growing, and they feel they're in the best position to capture that growth because of their scale, their brands, and their strategy.
Okay, so let's try and wrap this deep dive up. The core message from AB InBev's Q2 seems to be one of, well, profitable resilience, maybe.
I think that's a good way to put it. They're navigating a really mixed global picture, strong in some areas, facing headwinds in others like China and Brazil. But they're leaning hard on premium brands, digital tools, and just running efficiently to drive profit and margin growth, even when overall volume is slightly down.
It really highlights how diversification and strategic pricing can work, doesn't it? It's not just about selling more, it's about selling smarter.
Definitely. A masterclass in managing a complex portfolio for profit.
So here's a final thought for you, our listener, to chew on. We talked about the shift from bars to home drinking, the boom in non-alcoholic beer. How do you think the actual idea of beer and maybe beer culture might change over the next, say, 10 years because of these trends? And what kind of new drinking occasions could companies like AB InBev tap into, or maybe even invent as things keep evolving?
That's a great question.
Yeah.
With things like low-cal, no-alc, different flavors, digital delivery, the landscape is definitely shifting. What does grabbing a beer mean in 2035? Something to think about.